long-term price forecasts remain strong and even at the end of the cycle, and yet investment came down. What matters to investors today?
Well, I think in terms of what the companies are doing, clearly prices haven't come back down to exactly where they were before the major boom, but they have come down a long way, and their margins have been squeezed to a level that actually is quite similar to where they were before the boom. And as a consequence, they've very much cut back on exploration, on building new capacity, and developing new mines, trying to straighten out their balance sheets. They've written off a lot of the mergers and acquisitions that took place during the boom years, trying to stabilize things in preparation for the future. I mean, for what they hope will be a recovery at some stage, but in the meantime, just steadying the ship. The one area that is going differently is what is happening with the Chinese investors, because they have taken the opportunity of this cyclical downturn to continue their expansion out onto the world stage. And there are a number of places now where Chinese investors are quite active in acquiring some really quite good assets. I'm thinking of things like Minmetals in Peru, Jing Mining in Congo, in Papua New Guinea. So a series of Chinalco in Guinea, of course, as you know. They are swimming against the tide in this respect and using lower prices to capitalize by buying new mines.
But you say against the tide. Is that not actually what logic should
well,
be?
Strictly, yes. I suppose a lot of companies talk about investing counter-cyclically, investing during the barren years, if you like, so as to be ready when the boom arrives. But in reality, investors, their investors, are usually not happy to see companies being expansive when commodity prices are low. Usually they're freer with their checkbooks when prices are high. I mean, it is one of those kind of ironies, and one of the things that unfortunately tends to exaggerate up cycles and down cycles.